Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, June the 13th. I want to take just a brief minute to discuss what markets did last week, as the S&P 500 was the only positive index in town that we cover, with the index up 1.32% on the week. The mid-cap index, as measured by the S&P 400, was down 2.08%, and the small caps, as measured by the S&P 600, were down 2.6%. And what has caused this is the market, as the investors are starting to get concerned that the economy is slowing down and the Fed is going to be a little late to cut rates. That's why this market's starting to narrow. So let's talk a little bit about what we got this week in the consumer price index, or the CPI, the producer price index, which is PPI, as well as the Fed Bank meeting. So we get forward to this week, and we were kind of choppy, treading water, getting ready for the inflationary reports that we received. Yesterday was the CPI on Wednesday, and today, Thursday, was the PPI report. And CPI came in for the month of May unchanged from the month of April, while they were expecting it to be up 0.3% month over month. The overall CPI was down 0.1% from 3.4% in April to down to 3.3% in May. And that was encouraging, and that's an encouraging sign that inflation is continuing to come down. But as the Fed, it was fast forward to yesterday afternoon, we had Federal Reserve Chair Jay Powell give a press conference and release a statement, as well as we got what is called the SEP, or the dot plot, and that's the summary of economic projections. And what that is the voting Fed members will then say how many rate cuts or where they expect rates to end the year. And what we were able to surmise from that yesterday, from the press conference and from the chairman himself, is that he said the Fed still needs to see more work on inflation coming down before they even can consider a rate cut this year. And so they had only projected in one rate cut this year into the marketplace. And so that is what has caused this market to get incredibly narrow. Investors are plowing into the names that they know are going to grow and work no matter what the economic conditions are. Those are names centered around AI or AI ancillary, AI plus, things that are involved in the infrastructure build out of AI itself. And in the healthcare sector, it's the GLP-1s, or you would know those as the new weight loss drugs that are catching the country by storm. Those are really right now the only things working, and they all have to be the large cap ones. As we talked about in the beginning of the report, you had the S&P up over 1% last week, but the equal weight was down significantly. And if you look at a year to date, as of last Friday, the S&P's up over 12%. The equal weight S&P's only up 3%. Showing you that the average stock is really not participating so far, or was earlier, and this volatility that we've seen in May or April and into May has led the market to get narrow. And that's what we expect to continue to happen over the summer unless the Fed changes their tune. We expect there to be more volatility in the market, and we expect the market to narrow. And the thing that is concerning about some of these names that have been working is they are up on a stick, and there's a lot of profits to be had. So it leaves them open and susceptible for profit taking and for bad news to come and really take them down. Remember, things just don't go in a straight line up. I mean, we go like this and we move upwards. So expect the summer to be a little volatile in the portfolio. Expect some days like you saw this week, where you see the Dow open a couple hundred points down, but rally throughout the day. And that's an encouraging sign, showing us that there is still buying pressure in the market. But investors are waiting to see what the Fed's going to do. They believe that the Fed is going to be too late in cutting rates. We will see what the overall outcome is for that, but expect some volatility. So if you have questions about how to navigate the volatility that we're going to be going through this summer, call us. We'd love to talk to you and walk you through how to navigate that in your individual portfolio. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.